Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Thursday, the 20th of June, 2024, just after 6:15 p.m. Central Time. And what a day. You know, in the video today, and we all know that that's what's been carrying the NASDAQ and the S&P to a large degree. It got up and then it let go. It had about a $10 range, so it had about a 6% swing in price. And instantly, traders are going, uh-oh, that's it. I already read on candlestick charts an engulfing pattern. That's it. And it might be. At any point, you can get a lot of action happening in that. This is a stock that just keeps going up, you know, and at some point it'll correct. I don't want to be the top picker. I'll let other guys do it. What do you gain by that? I'd rather it break and you look to come in off the big break because there's so much money that wants to deploy into it. When we take a look at what's going on in the energies, we'll see the charts there, and you're up into a lot of resistance. You've been tacking on a small amount of yield back onto the 10-year and the 5-year notes. You have triple witching Friday tomorrow, which is going to create a lot of volatility. It traditionally does. When you look at what's going on in the stock market, you know, silver was up $1.27 an ounce today. That's a monster move. Copper market's back into the resistance zone, but it's right up to the 18-day average, where it's probably going to have a little bit of problems. In the dollar index, as I look at where this market's at, it came back up. Now, you know, you've got to get over the 106 area to be approaching the contract high, and you've got nothing but pressure here. Now, we did see today 3 central banks make moves. We saw the Swiss National Bank cut interest rates. We saw the Bank of England just hold straight, and the Norges Bank, Norway Central Bank, hold, but talk about they might be holding longer than people think. So interesting times that are all going with this. Now, we do get a number of reports tomorrow. Remember, we're playing catch-up because of the Juneteenth. As I said, you got the triple witching. The Conference Board comes out with their release for their monthly leading, coincident, and lagging indicators. That'll be out at 9. The natural gas storage report, which you normally get today, will come out at 9:30 tomorrow. The cattle on feed reports at 2 o'clock, and we get some grain numbers. And what the market's gearing up for is the upcoming acreage report in grains. That's going to be very, very important. The weekend, we saw the blistering temperatures, but the grains fell rather hard. I mean, the beans were down to 11.16 3/4 on the close. That's a big size drop. And to me, I just looked at it and said that they got enough rain. That's what I told traders last night, that yes, it's hot, but there's plenty of storms. It's not just dry heat. You're getting a lot of intermittent sprinkles, storms, whatever you want to call them, going through it. And obviously, you broke down, if you look at it, natural gas. Now, traders would have thought this would have soared on the heat. I mean, just turn on your national news and they'll show you the East Coast, and people are baking, people are dying. The heat's terrible. The storms that you've got in the Gulf of Mexico and how it hit Texas, and another one forming there now, and one right off the coast of Florida. So we're going to hear more and more of that. The ocean is hot compared to normal times, and that's the fuel for these type of storms. So we'll see what comes. All right. Let's go to the charts and let them do the talking. First off, here we are going into Friday, and the market is up nearly 0.76%. So I don't see a reversal on a closing price basis. And the market has stayed up over the 18-week average of closes. What I do see is a huge outside day to the downside. So if you haven't taken my outside day course, you want to learn about these type of patterns and what they mean. I will not teach them to you here. Go to iraepstein.com, go to the courses, and the outside day course, everything's explained there. So you can see how the markets come up. You still have the pattern in place of higher lows, higher highs. The market is still over the 18 day moving average of closes, which is over the green, the 100, which is over the 200. So yeah, you can get a break at any time here, and maybe today was that pattern. I know that I instantly read that the bearish engulfing candlestick pattern has taken place, so today's high, very important. Well, you know what you get from me? If you take my course, you'll learn about that without having to go to those candlestick patterns and learning additional importance. And that's what I've always believed. Candlestick is based in large part on outside days, traditional ups, downs, and relationship of price to the open. So it becomes fairly important in there, and to the previous day. And I used to take that, I used to trade with it, and I walked away from it because what I learned in life is you make things too difficult for yourself. And do you have to be that precise? I don't think so. That doesn't mean you shouldn't do it if that's your technique. I'm not knocking it. Whatever works for you works. But as I see the market, I can argue that we've gone into a pause. I can argue that this is a warning sign. I have no problem with that. It's not a go short sign. What bothers me and has bothered me is we've been running the upper Bollinger Band all the way through here, as you can see. This is called that gorilla glue trade, where you just latch on and you don't really get away from it. You just keep hitting it, and maybe this is where it breaks back. More important, if you lose the bullish embedded reading by the red line closing underneath 79, it would call for price and the 18-day average to strongly make a run at each other. Hasn't happened yet, so the pros will probably still be buying the break until they get wrong and you lose that embedded reading. That's what I would expect. In the NASDAQ, it's the same thing, and the same pattern. And now it's getting underneath and going to go sideways. So this market's going to be under pressure too. Lose the embedded reading. I'd be cautious here. You got an 85, you get much more of a break, you get under that somewhere along the line here. I expect then price and the 18-day average to make a run at each other. Does that mean I'm bearish? It does not. What's the bias in that market? Let me bring you back there. It's up. So you're saying, do I want to be the wise guy, the contra trend trader? I'll let you do that. I don't try to have my clients do that. As we look at the other indices, what you've really done is you've taken in the Bollinger Bands. Look at how wide they were and how narrow. So volatility's come out of this market. Yes, it has rallied. I thought it would have resistance on the first challenge of the 18 and the 100 day, and it did. And through today, it was able for the first time to get up to the Bollinger Band. So you finally got beyond it, but is it going to be easy to go from here anywhere? I don't think so. When I put out my morning subscriber video today, I told traders, I said, I think they're going to break the NASDAQ and the S&P, and they're going to see a reversal of traders unwinding spreads of those indices versus the Dow and the Russell 2000. And the Russell's still the darn weakest, but it certainly happened in the Russell and in the Dow. Now, you had another outside day down today in this. That's a continuation pattern. And until you take out this high, the market's still pointing down. Now, it is oversold. It's not a market I would certainly give you a jab in the rib and say, hey, go short this market. No, you're not getting that. I do see the resistance, 2074 to 2065. But unlike the S&P, which has the pause pattern, or the NASDAQ, which has the pause too, this is a different pattern. It's still a continuation pattern. Again, the outside day course, so important to learn that. And then all of a sudden you go, gee, I get it. I see what it's trying to say. And it's a really common pattern. So in the 10-year note, are you going to lose the bullish embedded reading? You could, and you open the door up for it to slip back here. I could see that making sense. You're overbought anyways. I don't think the pros are rushing in to buy this right here. You could go higher, but I don't see it. I don't see it in the 5-year either. Look, you're overbought. You're turning back down. We know the bias is up if you follow my trade idea that when you're over the 18-day average, you're looking for potential buys. But also, when you're overbought, not holding on strongly with the embedded reading, it's a time to back away. In the dollar index, you are overbought. You've had an uptrend. You've been to the Bollinger Band. You fall back, keep coming up to challenge it. But that overbought part keeps me away from wanting to reach for the market. And it's the flip-flop in the euro. I'm bearish. We discussed here that the market answered the question. The countries that hold interest rates versus the ones that are aggressively cutting them or want to cut in addition to the cuts they've made. That currency goes up, this currency goes down, and it's pretty much where you're at right now. And in the British pound, while they didn't cut anything, they also are talking that it could happen as soon as August. At least that's what the trade seems to think. Down you go. They've got a political nightmare coming up for them. It looks to me like you're going to get a new prime minister and possibly new parliament. Anything can happen right here. This is going to be a wild move. When we come to Bitcoin, is the market going to embed? Embedding occurs when the two numbers go under 80 for several days in a row or more. You can't count Friday because we don't know where it's going to settle. But you did have that happen on Thursday. Did you have it happen on Tuesday? You did not. So you can't get the embedded reading. You're just oversold. I would expect to see the market try to then find support from 64,274 right into the 63,874, the Bollinger Band and the 100-day average. That's where I'm looking for the support to show up, at least short covering to happen. Remember, this market has been running down, so I don't think it's the first level of short covering. You haven't really bounced away. You've established the gorilla glue trade, so this market's under selling pressure. When we come to the Brent versus WTI crude, they fell back now underneath the 18-day average, which means the differential between the two is shrinking. They're trading much more in line with each other. You're up to the Bollinger Band resistance. You're overbought on a big spike up. In order to catch this, you had to decide that's a low. I don't know how you did it, but I'm sure you did it, and you caught all that. You know I'm being facetious. I saw the short covering right through here. I didn't see the turnaround like that, and I don't think most people did. Most techniques would have. Market holding up here, same thing in WTI. This is the trade that I could have taken part in again, and that's on the Rebob gas, where it got up to the 100-day average in the Bollinger Band, and that's where I think the pros are taking money off. I wrote an article in my newsletter. I warned traders as it was coming up here just this morning and the other day. Over the holiday, and I said, be careful. The president can release that 1 million barrels of gasoline on the market at any point. You don't want to get carried away here because you don't have control over that. And he will stop that because he's not going into the debate next week with this market running away on him. He has control over that. You've come now from here into the 230 area all the way to 250. Another thing you've got to understand, we just saw a series of numbers come out that in the PPI and so on, it showed you gasoline, the importance of it. It was down 2.2%. We are up more than that. This is, yes, a futures contract, but it relates very well to what wholesale gasoline prices are doing because it's a hedging vehicle. So pay attention. That's going to be a negative for the month of June. You've got 10 days to correct it. You'd have to break pretty hard to do that. And no reason to hang around natural gas. Now, for traders that were in my UNG trade on the ETF this morning, first thing I said is at the market, take your profit, which they had, a nice one, and just call it a day on the remaining part. I told them as the market was coming up like it did over there to come out of most of their positions. They only had 25% long, and that's the neat part about ETFs. You know, you buy 100 shares if you can afford it, and you peel off 50, 25%, and so on. In futures, I say always trade a minimum of 2 contracts. So you got to decide what your own finances are, what you're more comfortable with. But to me, a chart's a chart. fact, I prefer not to see the name on the chart other than a weather event or isn't big earnings coming out or a major government report, things of that nature. So, when I looked at that market, I said, okay, that's interesting time. We'll see what goes on. Remember the triple witching. It will create the volatility tomorrow. One more thing I want to remind you, you hear me, I can't do it, unfortunately, that showed up. Go to our website at iraepstein.com for any of the free offers. You hear me talk about all these indicators. Just go to iraepstein.com, free offers, or click up here and get volumes 1 and 2 of our technical indicators. I think you'll really get yourself in tune with what I talk about. I'm Ira Epstein. You have yourself a great day, and I will catch up with you first thing in the morning.